Today we will discuss moving average price materials, procurement of stock materials. Procurement of stock materials, goods receipt of moving average price materials. No variance, no price variance at GR and IR, which means that PO price is same as material master record price, MMR price, €10 per each. For this we need to create a purchase order. I have created a purchase order, okay, for €10 per each, and I did the goods receipt also. I will show you the documents. Purchase order I will show you. I will show you the purchase order. This is the purchase order I have created, okay. M100V1 with PO quantity 10 and net price 10, this which is same as material master price. How we can see? Double click here, go to accounting 1. Here the material master price is 10. Okay. After that, what I did the goods receipt. How we do the goods receipt? Using Migo. The goods receipt is this document. Goods receipt document. Here FI documents, if you see, accounting document. Okay, BSX debit 100, WRX, that is GRIR clearing account, is 100 credit. Okay, this is the transaction event keys. Okay, all right. So now what we have to do? We have to do the invoice receipt. So here we are done. Purchase order is created. GR was done. Now we have to do the invoice receipt. So go to invoice receipt. That means there is no price variance at the time of goods receipt also. So what we'll do is purchase logistics invoice verification. Miro is the entry. Invoice. Reference will put as reference 1. Okay. Then here this is the purchase order number. Execute. Then baseline date we have to enter. Baseline date in this one. And what is the amount? You have to enter amount. And tax is no tax, non-taxable. See, the balance is 0. Okay. Simulate. Now simulate. What happens is, when you do simulation, it will show up which accounts are getting posted. Okay. GRIR clearing account is cleared with 100 debit and offset to supplier account €100. Okay. That is okay. From here also you can post, or simply you come here and you click on post. What is the message? What is the messages? Let us see. Tax code V0 also exists. Okay. So what we have to do? We have to see what is the tax code here. Otherwise, what we can do is here, yes, input tax it should be 0. Before allocation only you have to change it. That is why it went into error. So what you do is, now simulate. Tax amount, calculate tax, it is 0, 100. Okay, now we have to select this and simulate. Okay, back. Now it is green. So now let us post the invoice document. Invoice document is posted. Okay, other document, if you click, it will come. This is invoice documents. And what is accounting document? Follow on documents you have to click. If you click on the follow on document, can you see what is the posting? KBS supplier is 100 minus and GRIR clearing account is WRX 100 euros debit. See, system always first tries to clear the clearing accounts first. GRIR clearing account cleared first 100 and offset to supplier account. With this we completed scenario 1. What is scenario 1? This is a scenario 1. There is no price variance at the time of PO. Now let us go. Second one. Scenario 2. Price variance at PO. Okay, MMR price is 10 euro each, but we are ordering at 12 euro per each. Okay, now what I'll do, I'll create a purchase order now. We'll go to purchasing, create a purchase order, same supplier, purchasing group is this, company code automatically it will come. Then the second material is V2. Okay, plant is this one, quantity 10, and it will ask net price. Net price, what is net price? 12 euros. At the time of ordering itself, we have a variance of 2 euros. Can you see? Effective price 12 euros, material price is 10 euros. Correct? Yeah, you can see it from here also. What you can do is, you can go here, double click the material master, then go to accounting 1. This is 10 euro per piece. Okay. Now everything is fine. Check this. Everything is fine. Then simply post the purchase order. What is the purchase order number? 917. Okay. So we'll go to goods receipt. You have created the purchase order. Okay. Now we have to do GR. We'll go to GR. We go goods receipt. Reference document is purchase order and the document number is this. Okay. Go to where tab. So location is this. Item OK, indicator. Then check the document. It is fine. Let us save the document. Can you see? This number is posted. How to display the material document? Just click on this. The latest document will be displayed. And go and see the document in file on documents. That is accounting document. Accounting document, if you see BSX 120, WRX 120. From here, if you go and see the material master, from here if you cannot go, what we'll do, purchase order data. Here let us see whether we go. Yes, we can go to material master. Now you see accounting 1, it will become 12 euros. Earlier with zero stock it was 10 euros. Now we purchased with price variance of 2 euro per piece, right? That 12 euros. Okay. So it is inventory value 120 euros. Okay. Okay. Then invoice. If you go and do the invoice, purchase order number is this. Okay. But if you look at the document, okay, goods receipt 120 debit, GRI clearing account credit. Okay. Now at the time of invoice receipt, GRI clearing account is cleared 120 and offset to KBS. Okay, the creditor is 120. Now we'll do invoice verification. Miro, enter invoice verification. Date, let us give reference as to. Initially if we change it now, it won't have any impact. This is a PO number 917 and you have to give the baseline date. Here you click on calculate tax, it will be 0 and amount will be 120, correct? 120, balance is 0. Okay, debits equal to credits. Now we see GRIR clearing account is 120 debit and offset to supplier liability 120. So simulation is complete and we are ready to post this document. This is the document created, latest document. If you click that, it will come, and then if you see the following documents, 120 is KBS, GRI clearing account is 120 and the offset to supplier liability 120 minus, that is credit. So with this we completed scenario 2. Okay, now look at the material master once. From here you cannot see what we can do. So display the purchase order. Okay, if you look at the purchase order history, we have done the goods receipt and we have done the invoice receipt. Okay, now look at the material master. There won't be any change. No postings to material at the time of invoice receipt. So it is same. Okay, now we'll go to scenario 3. What is scenario 3? Price variance at IR. Okay, case 1. This is case 1. IR quantity is less than or equal to stock quantity. Okay, what happens you see. We will create a new purchase order, 10 euro per each, no variance at the PO level, no variance at GR. Okay, there will be a variance of 2 euro per piece at the time of invoice. How it behave you see. Okay, let us create let us create another purchase order, that is for material, third material. Okay, we give the material as B3. No price difference at the time of PO. Okay, scenario is like that. Okay, now what is the present price of the material? Accounting 1, it is 10 euros, right? Zero stock, 10 euros. This is the moving average price control, periodic unit price. This is price control V. This is price control V and the corresponding price is, and the price is 10 euros. Okay, now let us check this PO. Everything is fine, no errors found. Save this purchase order. This is 918. If you look at the purchase order, yes, we have created. Okay, now what we have to do? We have to do simply GR. No need to look at anything, simply GR. Invoice level only we have to make a difference. Goods receipt. Okay, item okay. The where tab, what is the store location? Plant is this, store location is that 0001. Check the document. Yes, no errors, document is okay. Now we'll post this. Display, to display the purchase material document. Okay, doc info, FI documents and accounting document. Okay, can you see BSX debit 100, WRX 100. Okay, this scenario is case 3 scenario, case 3 scenario 3 case 1. Okay, now we are not consumed any goods. Mat the M100 V3, we are not consumed any before the invoice receipt. Now what we'll do, we will go to invoice receipt, reference will put as 3, 18. Okay, what we'll do, amount here we'll change it, 10 each, 120. So this will be the payment baseline date, 120. Okay, now come here, calculate tax, 0, and amount is 120. Now what happens, you see, messages, price too high, tolerance limit 5 pound exceeded. Okay, no problem, that is a different concept. Okay, simulate. What happens, you see, can you see, material stock account is posted with 20 euros, okay, and GRI clearing account is 100, supplier is 120, same I have entered here. See, the GRI clearing account 100 cleared and accounts payable 120, stock account get posted to 20 euros, okay, same thing I have entered, right, because we are not consumed any goods prior receiving the invoice. Okay, now what we'll do, post the invoice. After this, what happens, stock will become 120 euros. Go to follow on documents, accounting document. Can you see, stock account get debited with 20 euros and GRI cleared account is cleared with 100 euros, offsetting entry is 120. Now go and see the material master. How we can see, you can go to purchase order, go to purchase order, purchasing, purchase order display, the same purchase order will be displayed. Go to purchase order history, and you can see, okay, goods receipt is 100 but invoice receipt is 120. Now can you see here, M100 V3, it will become 120 euros. Can you see? Yes. Now what we'll do, we'll go to case 3, scenario 2. Scenario 3, case 2. IR quantity is greater than stock quantity. Okay, what we'll do here, first we'll create a purchase order, then we'll do the goods issue for 10 euros, then we'll do a goods issue for 6 piece to a cost center, then we'll do the IR, okay, because for 6 pieces already left is already consumed. So if IR quantity is coming with the variance of 12 euro per each for 10 pieces, then what happens, you know, GR clearing account 100 euros, supplier liability 120, inventory 8 euros, only 4 pieces available now, 4 into 2 8 euros, and price difference account will be 12 euros. Okay, we'll see that. What we'll do, we'll first, this is scenario 3, case 2. You have to create a purchase order. Okay, for this material we'll take as we take the material as V4. Quantity 10, net price 10. There is no price variance. Okay. Okay, check this purchase order. Okay, save it. We'll go, this is 990. Okay, We'll do the goods receipt, chasing inventory management, MeGo, goods receipt, reference to purchase order, item OK, in the wait tab enter the, check the document is correct, then post the document. Goods receipt for M100 V4. Okay, what happens is, you will see here V4 is initially 10 euros at zero stock, now also it is 10 euros because we have posted 100 euro per piece. Now what we'll do is, what we have to do is, we have to do goods issue for 6 pieces. Same MeGo we can use, goods issue. We'll keep as other. Okay, 201. Okay, 201. Material is M100 V4. Okay, quantity how many? 6 pieces, right? We have to do 6 pieces. Where? From plant 001, 001, cost center 1000. Take a cost center of company code 001. Some cost center will post. Okay, so what we'll do? Okay, let us check the document. It is okay. We are issuing goods 6 pieces to this cost center for account assignment. For this cost center, we are issuing the goods. Check OK, then post the document. Document is posted. Display the document. Look at the file on documents, FI documents. Accounting document will be, can you see spare part BSX 160 euros and spare parts consumption, GBB is consumption, it is VBR, GBB is a transaction key and 60 euros is debit, expense is debit. So we have completed up to here. Goods issue 6 each to a cost center we have done. Okay, BSX credit, okay, and GBB VBR debit 60 euros. Like, can you see goods issue 60 euros credit stock account and consumption account 60 euros. What is the consumption account we got here? 30 GBB 404000, 404000. Okay, here we will correct this 404000 VBR. Okay, okay, now $404,000 expense account is 60 debit. Okay, now what we have to do? We have to go to invoice, and invoice is, let us go to invoice. This one reference will give as 4, tax code as no tax, and we'll give this. Okay, amount here we have to change it now, 120, and here it is 120. Okay, balance is 0. Simulate now, you see what happens. You see, baseline date is okay. Can you see now here? Yes. Can you see 231000? Okay, Supplier-wise liability is 120 euros. GRI clearing account is 100. Only 4 pieces are available now. 4 into 2. Per each piece, 2 euros variance was there now. That 4 into 2, 8. How much stock is available? Only 4 are available because we did 6 goods issue. So the 4 into 2, 8 euros. And the price difference account is loss from external product price differences. Yes, how many pieces we have already goods issue? 6 pieces. 6 into 2, 12. 12 euros. What are the GL accounts? Let us see. Okay. Here the GL account also will change for supplier 161000. 161000 and price difference account is 231000. Can you see here? GRIR clearing account is cleared 100. Supplier liability is 120. Stock account is 8 euros and price difference account is 12 euros. With this, these are the possible scenarios for procurement of stock materials. Please change this KBS on other places also. 161000. 161000. It is not 161000. With this, we completed all the scenarios. Okay, please like, share and subscribe. Okay.